Tax-efficient investing should always be a priority in asset placement across accounts and in subsequent fund selection, especially for high-income investors. Why give up money to Uncle Sam unnecessarily if you don't have to? Minimizing your portfolio's tax burden means maximizing its long-term total return. In this video, we'll explore tax-efficient fund placement and the best ETFs for taxable accounts. Hey guys, John Williamson here, OptimizedPortfolio.com, investing in personal finance. Whether it's for shorter investing horizons, income investing, or retirement accounts spillover, investing in taxable accounts is unavoidable sometimes. It's usually a good problem to have. ETFs are particularly attractive for tax-efficient investing, but not all ETFs are created equally. Specifically, we're looking for ETFs with tax-efficient structure, passive management, low turnover, low capital gains distributions, low fees, and low dividend yield. Among these options are broad core stock funds, growth stock funds, treasury bonds, and municipal bonds. Let's dive into the 6 best ETFs for taxable accounts. First up is IVV, the iShares Core S&P 500 ETF. IVV tracks the S&P 500 index, which is composed of 500 of the largest companies in the United States. The fund has an expense ratio of 0.03%. Next on the list is ITOT, the iShares Core S&P Total US Stock Market ETF. To add exposure to small and mid caps, you might go with a total market ETF. ITOT from iShares is a low-cost option to access the total US stock market. The fund contains over 3,500 stocks and has an expense ratio of 0.03%. Third is IXUS, the iShares Core MSCI Total International Stock ETF. International stocks usually carry a higher dividend yield than US stocks, but this is balanced out somewhat by the foreign tax credit, a credit to individuals who pay taxes on foreign investment income. This makes international stock funds reasonably tax efficient. Just like ITOT, IXUS is a low-cost option to get exposure to a broad total market, in this case ex-US stocks. The fund tracks the MSCI ACWI ex-USA IMI index and has an expense ratio of 0.09%. Next up is VUG, the Vanguard Growth ETF. Prefer growth stocks or want a growth tilt in your portfolio? You're in luck. Growth stocks have low or no dividend yield, making them ideal for a taxable environment where a high yield creates a larger tax burden. The Vanguard Growth ETF tracks the CRISPR US Large Cap Growth Index, which is comprised of large cap stocks that exhibit growth characteristics. The fund has an expense ratio of 0.04%. Next on the list is VTEB, the Vanguard Tax-Exempt Bond ETF. Bond funds are usually best kept in tax-advantaged accounts, but if you want bonds in your taxable account, some are more tax efficient than others. Interest from municipal bonds is tax-free. This is especially impactful for high-income investors in a higher tax bracket. VTEB is Vanguard's Municipal Bond Index Fund, which tracks the S&P National AMT Free Municipal Bond Index. The ETF has an expense ratio of 0.06%. Last on the list is VGIT, the Vanguard Intermediate Term Treasury ETF. Interest from treasury bonds is tax-exempt at state and local levels. Treasury bonds tend to possess a lower correlation to stocks than municipal bonds, making them a likely superior hedge. Vanguard's Intermediate Term Treasury ETF tracks the Bloomberg Barclays U.S. Treasury 3 to 10-year bond index. The fund has an expense ratio of 0.05%.